Good afternoon, Fort McMurray. Melanie Galea with Remax Fort McMurray on this episode of Let's Talk Lending with my co-host,
Barb Pinsent from the Mortgage Center Elite.
All right, Barb, we get together 8 times a year so that we can talk about the Bank of Canada rate hold announcements. And so what happened?
No change today. And I think due to recent information, recent numbers that they didn't have until last week, had that not come in the way that it did, we might have seen a rate hold, but they were happy with what they seen because things are slowing down.
So talk about what is it that came out that changed, that you think changed their mind?
The people are not spending as much, so not as much credit, and unfortunately, or not, like that's mortgages as well, right? Because they're not gaining as much credit. Less spending, which is what they want to see anyways. Still some numbers that are cause for concern. Salaries are up like 4 to 5%, and that too they don't want to see, right? So some good news and some bad news in there, but at least they're going to hold on, and all of this takes time to kind of come down the pipeline as well, right? It's you're raising rates and it doesn't automatically take care of business. It takes some time, and it takes time for it to funnel through as well. So they'll just continue to monitor that, and we'll see what happens.
Exactly. So we're not out of the woods yet on rate holds increases.
No.
Yeah,
we are not, unfortunately. Or fortunately, I don't know. Like I don't have enough education to call that one, but it's definitely sad when you see where we are now compared to where we were. But there has to be some normal back in our lives too, and we haven't seen normal in many years.
Right.
Like a 5%. 5.5% is probably healthy, right? There's another aspect of people investing money where, do you want 1% on your return? Not. So it's one of those things.
Gotcha. All right. So Barb, let's talk about some stuff here. Okay. I'm going to bring up the presentation here, and it is debt to income ratios. And why is this important?
It's important because we want to keep debt levels down if we possibly can. And the more debt that you have, the less house that you can afford, because those ratios are, there are ratios that need to be met. 44% of your income is the maximum that you can have in debt. And that's combined, that's your mortgage payment, property taxes, a heating component, and any payments that you're making to creditors. So obviously, like your housing costs are 39% of your income. So you've got about 5% left over for debt. And if there's more than 5%, it starts taking away from the amount it is that you can spend on your home.
Right. So moral of the story.
Yeah.
Get your debt paid.
Exactly. And then just some scenarios here to give you an idea as to what it is that looks like based on, a payment of, $1,000 a month or $415, and what it is that you're going to be able to spend. Oh goodness, sorry. Based on where that all goes, right? So there's the two calculations I've talked to you about. One, housing costs, the other is total debt servicing. And the second calculation offers a little bit of flexibility, but there's not a lot, right? So if you've got payments in the amount of 415 in debt and wanted to buy, your income's 100 grand, it determines how much house it is that you can buy. And I think you might have gotten ahead of me by one screen there, Melanie, but if you just go to the next is fine.
Okay.
Because these numbers are based on an annual income of $100,000 a year.
Okay.
So, and I will get you, just to flick back once more to
forward or back?
Back.
Okay.
That screen. Yep. Yeah. So, the scenario here that you're seeing is a 5.54% rate. So based on a 5-year fixed rate, your purchase price would be somewhere around the $415,000 price range. And these are not exact numbers, but fairly close. And based on what you would pay for property taxes in Fort McMurray, and we have to add some heating costs in there as well. So now you can go forward to the next screen, and then
Yep.
The next, actually, this one we're good. So about 415 a month would allow you that $415,000 purchase. And this just gives you a sense of what's going to happen if you add more credit card debt, or you got vehicle payments, or whatever that looks like. So we typically have to use 3% as the minimum payment amount on revolving credit. So line of credit, a student loan, sometimes depending on the lender, credit cards. So any balances owing to those type creditors, we have to calculate a payment at 3%, even if whoever it is that you've borrowed the money from doesn't expect that as a minimum payment. That's what we're using, because they want to know that you're going to get rid of the debt sometime soon.
Gotcha.
All right. So
Gotcha.
if you would go to the next screen, now we're just showing you what payments of $1,000 a month in debt would buy you. And so if you had payments of $1,000 a month, you're now looking at a purchase price of about $329,000 based on the earlier criteria. So that's a difference of $86,000 that less you can spend. And if you'd go to the next screen, $2,000 a month in debt brings down your total spending budget to $215. So as you can see, makes a really big difference in how much it is that you can qualify for. So if you want more house, you got to get rid of some of that debt. And always a good idea to try and get that down anyways. Keep it to as much a minimum as you can, because And so if you're wondering, if it's better to clear debt when you're buying a home or use savings to increase your down payment, depends on your goals. And we look at all of that for you, right? So, if you're looking for more budget and you've got the money to pay down debt, then maybe you put less down and you pay down the debt. So depends on you and how you feel about all of that. But there is a little bit of maneuvering that we can do to maybe make that budget that you're looking for fit.
Gotcha.
Yeah. And so, make sure you're meeting deadlines, making them minimum payments. Don't mess around with your credit score. Cell phone bills important too, because those do report on a credit file. And who's to know that what might show one of these days, maybe utility bills will show up on there. So any bill it is that you have, do everything in your power to make sure that you are getting those payments made. And if all you can do is minimum payment, stick to the minimum payment.
Right.
Then you're not falling into arrears.
Okay. And here's how to get a hold of us. letstalklending.com. Barb, there might have been a problem with the slide only because it's changing. I don't have, I'll talk later to you about why that might have happened. Okay. But here's something that I wanted to share with people too. So I want to present my screen. You're going to lose me for a moment here. Entire screen. Here we go. Hello. But I want to share this screen here, and I just want to briefly talk about the stats just a little bit. So we are in a buyer's market when it comes to single family home sales. The inventory has come down, but our sales were up over last year at this time. And there was no year-over-year change, but the average to date this year is a little bit lower than last year. It's because the higher end stuff isn't selling. Now that's single family homes. Mobiles was balanced. We had soft balance with duplex, soft sellers with condo townhouses and condo apartments. So for an overall market, we're barely a balanced market. Okay. And so what I think is going to happen is that I think we may stay like this. I think we're going to see some confidence in the market, but if you're still looking, it can be still cheaper to buy versus, cheaper to buy than it is to purchase a house. You know what I mean? To own than to rent. So definitely keep those things in mind. Barb, when is the next date?
October 25th.
Okay. I was looking it up in case you didn't know. I forgot to write it down.
More announcements. October and then again in December.
Right. And so we're not off the hook, really hoping that that is going to slow down, but the Bank of Canada wants to get down to that 2% inflation rate. So,
and looks like they're going to do whatever it takes to.
Exactly.
Yeah.
All right, ladies and gentlemen, we will see you again in October. If you want to get a hold of us in the meantime, letstalklending.com is the best way. Barb and I both get your information. You want to fill out the form. We're here. We're a great tag team. If you're looking to purchase, if you're looking to sell, I'm happy to get you information. Barb can help you if you also want to refinance.
or renew. If
That's
you've
what I
got
meant.
an
Renew.
Yeah. Finance too. So.
Okay. Awesome. All right, Fort McMurray. Tag a friend, share this video, and we'll talk to you again in October.
Bye.